Welcome to A Canadian Investing in the U.S., a podcast and YouTube channel focused on Canadians buying real estate with host Glenn Sutherland.
Welcome to another episode of A Canadian Investing in the U.S. This week, my guest is Tsai. Tim, if you want to give us a little bit of an intro to yourself and we'll jump in.
Hello, everybody. My name is Tsai. I call Edmonton, Alberta, Canada home, and very, very happy to be back here again with Glenn because we haven't been investing on and off in the last 10 years in the US markets as well, and recently just decided to retarget, and probably why I got reinvited back too.
Yeah.
And just happy to share my stories and my experiences, and happy to answer any questions if you want to reach out to me in private afterwards.
Awesome. So let's jump into your trip. So you went to Hawaii and then you got stuck?
Like about a year ago, actually no, February last year. Yeah, we went to Hawaii. It wasn't so much that we got stuck. It was basically just we were getting cabin fever from not going anywhere all of 2020. And for people that don't know me, I used to travel 200 day plus a year. And I love that lifestyle. I enjoy traveling, exploring new places, going to see different markets, investing in different markets. And the reason why we actually took the trip was because A, cabin fever, B, we actually lost our dog at the end of 2020. And my husband and I were getting pretty depressed. Like we both had been clinically depressed in the past, and we could see all the signs coming on. So we're like, you know what, whatever it takes, let's just go somewhere. We need a change of scenery. And so we booked Hawaii for 17 days. And then right before we left, they were already talking about the hotel program and all that. And halfway through, they said, yep, it's going to kick in. The moment they say, yeah, it's starting on a certain day, I think it was like February 25th or something. And we were coming home on the 26th.
Yeah,
I remember that because I'm like, well, we're definitely going to have to do that. Yeah. And at first, I actually made an attempt to call, because initially there were only a few hotels per airport. So I remember when I was in Hawaii, I was making calls and waiting, like put on hold for like 2-3 hours for 2-3 days in a row. And after a certain point, we just said, F it, we're not gonna deal with that. We cancel our return flight. So we ended up staying in Hawaii for almost a month. We extended our trip. It was exactly, there's worse problems to have for sure. And then we ended up going to Phoenix. So we flew to Arizona and spent another month there. All of March we were there. And that's actually how and why we decided to have a second home now and to start snowbirding in Phoenix. And so now we're actively house hunting for ourselves. However, that's going to be a bit of a combined thing, meaning we're going to Airbnb it out when we're not there, because we still love traveling a lot.
And you're an investor, so why not?
Exactly. So we're going to Airbnb that out, and while we're not there. And when we're there, we're going to have a home base in the US as well, because one of the things is that we've decided to be a bit more active in the US markets again, because over the last few years, we were a lot more active in the UK markets, and then COVID hit and everything sort of stopped, and we kind of came back to Canada and we started growing the Canadian portfolio. I mean, in the last year and a half, I mean, they weren't big years. However, we only added about 84 doors. And
just 84.
For us, that's slow. Yeah. So everything's relative. I mean, I know for some people it sounds like a lot. However, we do work with a investor group as well. So really, we are the managing partner. We are the capital management company. Yeah. And so 84 is not a whole lot after the split with everybody.
Right. Okay.
And anyway, so yeah, that was really what got us to decide to spend more time in the US. Because after Arizona, we decided to go to New Orleans. We went to Georgia, went to Savannah, we went to Orlando, and then we took a week off and went to Mexico. And then we ended up back in Seattle.
So many places.
I know. So that's how it ended up. 17 days turned into 93 days in total. And we ended up basically, so what happened was, because we were in Seattle, and so we got family in the Lower Mainland in the Vancouver area. Yeah. So we got our friends to drop us off at the border, and we literally walked across the border like a bunch of hobos. Yeah. And we got picked up by Ray's brother, and we got dropped off at the airport and came home. That's how the whole thing ended, to bypass the hotel thing.
So you're going and you're going all over. I heard New Orleans, like all over the US.
Georgia, yeah,
Georgia. So
Florida.
were you looking at real estate when you were doing there, or just having a
Absolutely.
vacation?
I mean, every time I go anywhere, and that's the thing. And one of the biggest things that I learned early on is we no longer have personal vacations. They're all business trips now.
Yeah. Well,
I mean,
just
yes,
have
there's
to,
some personal time. However, yeah, I mean, it's really, I mean, I don't want to use the word passion because that sounds really cliche. However, I'm just naturally fascinated by it. Every time I go to a place, I mean, where can you go that does not have real estate? Everybody
Cuba.
needs a house. Maybe.
I went to Cuba and I was like, I'm gonna look at buying some houses here, and I'm
Yeah.
like, no, this is bad news.
Yeah.
Bad news. But anyway,
Yeah.
besides that, yeah.
Yeah, exactly. So, and that's why, I mean, we're just naturally fascinated by it. And again, I mean, you know, don't just listen to something like this and go, yeah, every time I go out on a vacation, I'm going to write up my entire trips off. No, there are guidelines
Oh, yeah.
that you have to adhere to and really educate yourself on those guidelines. And for us, it just happens very naturally. And plus, well, we started a training academy as well.
Yeah.
And so constantly discovering new markets to go into is something that we also train other people to do as well. So we've been very blessed to be able to combine our personal interest, passion of travel with our businesses. So it works out.
Yeah.
Yeah.
And I know you invest in Canada, you invest in the US. Our last episode, we were talking about investing in Scotland and Europe. So like what does it look like these days? What, like, you did this trip last year. Did that bring more US stuff? Where's your primary focus?
Yeah. So like I said, because of COVID and the lack of traveling in 2020, and then we just started to go out again last year, it really reignited our passion in the US market. And I know you're very active. And one thing I really love about working with the US power team is that they hustle. They hustle like no Canadians would. like most Canadians wouldn't.
So which part of the teams? Like, you mean the realtors or the contractors, or
Everybody.
okay?
I mean, I think it's because of the network that we've built over the years. Every time, I asked people, like, for example, I asked you to see if you have a good accountant referral, and you said, hey, talk to these guys.
I got a couple different ones.
Yeah, a couple of them. And I'm going to name drop so you can decide to cut it off or not. Ali, who you have brought onto the show as well, or your podcast, he's been absolutely amazing, because US is not a foreign market for me, in the sense that we were active between 2013 and 2017 ourselves. And we decided to stop and grow another portfolio internationally, which is the UK. And then now going back to it, a lot of the corporate structure, asset protection, and income protection strategies that I used to know, they've been updated because the government have changed hands and there are different policies. And so it became a little bit confusing initially when we were looking to set up our corporate structure again. And what ended up happening was I was kind of listening to my gut feeling on what might be the best way to do things. And I kept getting pushed around. And then you introduced me to Ali, and I talked to him. And basically, the moment we spoke, we aligned. I explained to him my thought process, what we're looking to accomplish. And he's like, this is all you need. And I'm like, that's exactly what I thought. And everybody else was telling me to do this layer, do that layer, do this trust, do this company in this state, in that state. No. So he kept it very simple for me. Yeah. And I mean, in the US, we didn't really do much, only picked up 3 doors in the last 3 months. However, it's sort of our way to reintegrate into the market. And
you gotta do a proof of concept again, right? Start over.
Exactly. One of them was in Arizona. The other one is in Indiana, actually. And so for me, these are the 2 markets that I'm interested in. And so I wanted to at least just go in small again. And that's something that we do, is that we don't always just go crazy, even though, we're buying, 80 unit apartment complexes, 100 unit apartment complexes, and we build, multi-units over the years already. Every time I go into a brand new market, I still start small. I mean, call it conservative, call it protective, whatever it may be. Because again, I think I shared this with you. I mean, I started really young. This year marks 12 years of me being an investor, and I'm turning 40 in a couple of weeks here. And so what that means is most of the capital that we actually invest with is largely from other people's money. Yep. And last episode, I also shared, the last time I was on, I also shared that somebody took my money and ran. So I know what that feels like. And so I'm conservative when I'm in a new market, because my job is to protect and grow everybody's wealth and not to gamble people's money away. Yeah. And most importantly, like you said, proof of concept. I want to get used to the buying process again. Yeah. In the different states. I mean, the states is a completely different thing, as you know, every single state.
When I started investing in the US, I did it by myself and had to go through the growing pains of doing that. GlennSutherland.com/coaching. A 12-week coaching program done 1 hour per week over Zoom from the comfort of your own home. Classes are kept to 5 people to be able to answer everyone's questions. Shortcut the process. Make fewer mistakes. Curriculum available at GlennSutherland.com/coaching. There's so many places you just travel to. Why Arizona? Why Indianapolis? Why not doing Louisiana when you were there? Why not doing Georgia? What was the determining factors?
The determining factors at this point, it's really, I treat every property like a business. And so from a business standpoint, once again, every single property has to cash flow, which means the rental yields have to be there, the cap has to be there. Obviously, the good lending has to be there. And despite the fact that most markets are going up, every single lender would still have preferred markets that they want to go into, bigger appetites, easier access to funding, as you remember, because we did a deal together. And sometimes lending and refi can take a long time because it's not the type of property or not the type of market that the lenders are looking at. And that delays everything. And time is everything, especially when you're on borrowed money.
Oh.
And
preaching. I totally understand that.
Exactly. And so what really ultimately determined it is that as much as Atlanta is, in my opinion, Atlanta is still a very viable market. It's just that the numbers are a little too tight. Because again, as professionals, when we run numbers, it's not as simple as, hey, you get your rent payment, that is your revenue, and then you minus what we typically call your pity payment, which is your mortgage payment, taxes, and insurance. Yeah. Really, for most of us, especially when you're running at a scale, you're not the property manager yourself. So property management and all the building maintenances need to be taken into account, and your marketing and your reacquisition and your turnover and your cleaning and your regular lawn and snow, depending on where the property is. Yeah. So we build those numbers in very, very strictly and very conservatively. And it just really worked out. The way it worked out is Atlanta, as great as it is, it's great economic drivers, huge city, great population, growing. It squeezed a little too tight. And so that's why we started to look into more of the Midwest states as well. And I landed on Indiana. I mean, Indiana is really not a huge secret, I think, for many people that do actively invest in the US. Yeah. And again, the first 5 years when we were there, I never went into that market. We were in Florida, we were in Arizona, and we were in Texas. That was it.
So is that the same strategy for Arizona? Because I totally get that for Indiana, because I invest in Indiana as well.
Yeah.
For Arizona, I find it's a little bit more expensive.
Oh, Arizona's getting stupid expensive. Can I say that? Yes.
Yes, you can say that. You can say that.
So, I mean, that's the thing. I mean, as investors, prices obviously still matter. However, we always say that it's not about how much it's going to cost me, it's how much it's going to make me. If a $10 million building can generate you better return, I'd rather buy a $10 million building and do the fundraising and go through the work and due diligence process for that than buy a $100,000 building that's going to be in the negative. So from an investor's mindset, no problem. However, if I don't know if you remember, the way I invest and the way I teach is also very much strategy first, and then we pick the market. So S&P, as I mentioned last time, strategy first, and then you let the markets let your strategies determine your market to see if it supports your strategies. And then once you've got your markets picked out, then you start property shopping. so that you're not wasting your time. And so the reason why Arizona became viable still is simply because of the fact that we decided that we wanted to snowbird.
Right.
And
another thing on the other side of this, because it's a little different, because you're talking about doing larger multifamily in Arizona, and there is some advantages to doing multifamily in compressed cap rates, because any change you make is multiplied so much bigger. But you're talking about much more expensive and much more money, but any change you can do to improve that building is multiplied. It's leverage. Totally. It's all leverage, right?
Exactly.
So anyway, I thought I'd just throw that in there.
Oh yeah.
But okay, so why stop the first time? I know that like investing in Europe is even down in going into the South America sounds really sexy to me too. Was that the draw, or why pull out of the US back in, would you say 2018,
2017?
Yeah.
Well, I mean, without it being, because this was I'll just say this, it was an extremely frustrating time, because at that point it hit me, and without going too much into details, really, it just really hit me. I think most people will understand this, how liberal most of our money partners were.
Okay.
So this was the beginning of 2017. If everybody can recall what happened in US elections at the end of 2016.
Oh, yes.
And so many of our money partners, they did not want to keep their money in the US anymore. And that's also why we had to either liquidate. That's the funny thing, liquidate, or we buy them out. And at the time, we just decided that, hey, you know what? That's okay. Let's go into a different market as well. And it just so happened that leading up to 2017, I have been learning about the UK market for about a year and a half, and I have already been building up sort of my network over there. And so when they wanted to pull out of the US market, I had enough information and knowledge now and connection to say, hey, I found another very viable market, and here are some of the strategies that we can use and that would create really amazing returns. Would you be interested in? Rather than, okay, let's liquidate as much as we can in the US and bring it back to Canada and see what we can do. Because at the end of the day, if you look at the UK, 65 million people in population, so almost double Canada, and the size of the UK is Vancouver Island.
Yep.
Really, I mean, slightly bigger. However, that's the point. The density is there. And that's why a lot of us enjoy investing in the US as well, is the fact that 10, 12 times more population. Depending on if you're looking documented or undocumented.
Yeah.
At the end of the day, everybody needs a roof over their head.
Yep. And whenever you're like, if you're the lender, like you're a private lender and you put your money in, when you get your money back, you need somewhere to put your money in. Like, you don't want your money sitting in your bank account. So
exactly,
if you can come up, if you can do what you say you're going to do, give them the money back when they ask for it back, and then they're going to be comfortable to give you the money again.
Yeah, exactly. Yeah, it was definitely, I mean, I don't know if it's politics driven or fear driven or a little bit of both. However, that's exactly what happened. So it wasn't that we wanted to exit the market voluntarily, if you will.
Yeah.
Yeah. Yeah. So I'm really excited because now, having been building our own portfolio for a lot longer now, we have the capability to just go down and do proof of concepts with our own funds now. And and we're already starting to let some people know, and many are already gearing up to go south with us again. So
what is the plan? Is it to buy a big building, or what are you thinking?
Well,
or is that top secret at that point?
No, nothing. You know me, I'm overbooked. Nothing is ever top secret. I mean, I really do believe that there are enough deals to go around, and everybody's goals and stages in life and their investment career is different. Nothing really is a secret. So I will share this though, because I was actually back in Phoenix in November, end of November there as well, right before US Thanksgiving. And we went back to, we stayed in Scottsdale. So for people that know the Phoenix metro area a bit better, I mean, first of all, I actually did not know until March last year that Phoenix is actually either, depending on what report you're reading, either number 5 or number 6, this 5th or the 6th largest city in the United States based on population.
I did not know that.
Yeah. And because at one point I remember driving around Phoenix last March and going, man, it takes like 2 hours from one end of the city to another. It's crazy. I mean, not Phoenix, however, Phoenix Metro.
Yeah. Okay. Yeah.
And because we have friends that live in different parts of Phoenix Metro. And I remember one night we were going to a couple of parties back to back to visit friends.
Yeah.
And I realized it's an hour. It's an hour one way. It's crazy. And I'm barely touching like a quarter of that whole area. Anyways, and so obviously because of that, I started to really get interested. And plus the friends that we were visiting, they're also real estate investors themselves. They've been in that market for 12 years from Vancouver. They've never left the market. And they're laughing all the way to the banks right now because the last 3 years have just been insane. When we were there in March, I learned that in 2020, because of COVID, kind of like what happened to the Canadian markets, the Phoenix metro area overall, on average, single family homes went up by 60% in value.
60?
60. And everybody's going, what the heck is happening? And then we started to really dig down on the numbers. And turns out it was all the Silicon Valley people. When they got their permanent work from home notice, they bypassed Nevada and they went straight into Arizona.
Does anyone live in California anymore? Because like a couple of years ago, it was like the big story. Everyone's leaving California and going to Texas. Like
they're getting recalled though, a lot of them, especially in the Valley.
Yeah.
Like I have quite a bit of friends that work out of Silicon Valley, and and one of them.
You're a young guy renting there. It's a little pricey.
It is insane. Yeah. It is insane. So, like my friend, a friend of mine works for Stanford, and he got permanent work from home notice, and the next month he bought himself a place in Maui and it moved.
Maui, wow.
I know.
So I've done some like talks with some lenders on Maui and over there, and it's like people try to use these as investment properties, and even to do them as Airbnbs, they're really tough to make them cash flow. $2 million, $3 million places. Multiple $1 million places, condos.
It's insane. It's insane. A couple of our friends in Oahu, in the Honolulu market, they're realtors, and I don't know if I can plug for them. They're called Team Lally. Sure. Anyways, go for it. They're amazing people to work with, and they're very good friends of ours. And every time we go, they take us out to like comedy clubs. We go on their private yachts, and we go into the middle of the Pacific, and we get to dive into the ocean with nobody else. And anyways, they're amazing to work with. However, obviously we were chatting about maybe us acquiring some properties over there, because again, where else would you want to go? I mean, we're going back to Oahu in about 4 weeks here again as well.
Oh, awesome.
So and so they're basically, it's not even the value, it's taxation. And this is why how we opened this is you were asking me all the places that we went to, why only 2 different cities right now? It's because of taxation. I mean, at the end of the day, as investors, when we're running numbers, every numbers that we run is net profit. However, let's not forget about taxes. The government always wants a piece of that. And so again, everything we do is above board. You gotta adhere to the tax codes and tax laws. However, there are states that will allow you to be a bit better off if you structure your businesses correctly. And that's really ultimately what made us decide on those. Because no problem buying, a nice property beachfront in Hawaii, rent it out, and then that'll be our winter home. That sounds way sexier than Arizona, really.
Arizona still sounds pretty good. That's
I do like it.
the Florida of the West.
Yeah.
Awesome.
Yes.
Tim, if people wanted to track you down, want to know about Trust Your Talent or any of your other stuff, do your plugs. Tell everybody. I
mean, for me, it's very easy. I mean, we started Trust Your Talent, and we're now celebrating 2 years already, and we're going to our 3rd year. Our mission statement is to create financial independence one person at a time. And very proud to say over the last 2 years, we've created amazing results. I'm just happy because I'm a regular Joe. Go back and listen to the first episode that you and I did. Nobody special. I wasn't born with a silver spoon. Really just learned and improved for my financial education, leveraging real estate, and worked really hard for the first 10 years. And I mean, I'm 12 years in now, and just really want to create a vehicle to properly give back. So look me up on trustyourtalent.ca, and you can get a hold of me anytime, or you can look me up on Facebook as well, facebook.com/thetimtsai. Very, very straightforward.
Awesome. Thank you so much for coming on the show. I really appreciate it.
Thanks, Glenn, for having me again.